Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so let's just have a quick recap of where we were yesterday, because that's an important event. So yesterday, China eased the restrictions and opened up, and that sent overseas markets, overnight markets in Europe, in UK, and in the US up on the back of a rising market in Asia. In other words, that investors and the West and investors, analysts believe that China is going to save the West as it did in the 2008-2009 banking crisis. Well, that's not going to happen this time around, simply because there's many other economic factors involved that is preventing that from happening. So if you look at my Instagrams yesterday and the YouTubes, if you're following, then what happened is that I stated clearly that the markets will come off. In fact, in the morning, the US markets and the European markets, UK markets, were all super high. The UK was up nearly 100 points. The DAX was up 200 points. The Dow was up 300 points. The Nasdaq was up over nearly 300 points. Everything looked very rosy. But when I published yesterday's broadcast on Driving Markets, I made a specific note, whether it was on YouTube or Instagram or Twitter, that the markets will come off. And it just so happens, not all the time, just so happens yesterday I was right. I'm not right all the time, so don't want you thinking that I'm arrogant. But yesterday I got it right. The markets began to come off. In fact, they ended up down on the day. There was dollar strength yesterday, and there was also a lot of Bitcoin strength. And I noted sell into the rally, sell into any strength in the market, simply because the market can't hold on to the gains at the moment, on the back of interest rate fears and on the back of inflation. If you recall, on Friday, the non-farm payrolls came in at 390,000, beating analyst expectations. Under normal circumstances, without fear of inflation and without fear of interest rates, then the markets would have shot up. But they did the opposite, because that indicated a very strong economy and indicated that the consumer is not going to stop spending, and therefore the central banks, the US, the Fed, the UK, European, are going to have to take more stringent action on tightening interest rates. As far as I'm concerned, inflation this year will reach officially round about the 15% level. Unofficially, it's already running at 20%, 18 to 20% on the unofficial level. That's what I'm quoting it at, purely based on the feeling of the cost of living. Whether you're going to Tesco, Safeways, Walgreens or Walmarts, you can feel the pinch in your pocket. Let's take a quick look at the Forex markets, the FX markets. So yesterday there was significant selling of the dollar on the back of appetite for risk, and therefore most majors and most miners went up against the dollar. However, that was short-lived, and once again there was a flight to the dollar, and overnight the dollar has gained again its strength. I've been saying from the beginning of the year, watch the dollar, invest in the dollar. The dollar's only going to get stronger against all major and all minor currencies. So it might be short-lived for an hour or two or a day or two, but the trend over the next year, 2 years, will be dollar strength. And that's just one of the circumstances we're in due to a rising interest rate environment. Here you look at Bitcoin. Bitcoin yesterday went up $1,500 to 31,500, and then just came completely off, and now it's down to right below the critical 30,000. I keep calling Bitcoin down to 20,000 level, and I've said it was by the end of last week, by the end of this week. Well, it's going to go down to 20,000. Unfortunately, I was wrong on the timetable, but I do believe in the short term that Bitcoin is going to go all the way down to 20,000, and even if, and possibly if, that bear market continues in cryptos, you could see it float all the way down to $8,000, which is more of a 6-month timetable, not a 1 month or 2 month timetable. So just keep an eye on Bitcoin, and be aware that corporate America, the big CEOs in America, are calling the economy as fearful, frightened, bad, going into recession. You've got all of the adjectives being used by Microsoft, by Elon Musk. You've got the Apple CEO saying that times ahead are going to be tough. You've got Tesla laying off 10% of its workforce. You've got Facebook freezing all drafting, all recruiting of staff, and actually now looking to lay off staff. So you've got the big boys, the big high techs that are looking to lay off, and that's going to have a big impact on the economy. Where will that available labor be absorbed? Well, if the high techs are not hiring, where is that labor going to go to? Well, it's probably going to go to the dole. It's going to be unemployed, or they're going to have to take a lot lower salaries, which would be good for fighting inflation, because that will reduce the appetite for consumer spending. So it's not such a bad thing. Just be aware of that. As regards mortgage rates, so the housing market has eased up a little bit in April and probably going to ease up a little bit more in May. The reason being for that could be twofold. Number one, could be people who just want to exploit the high values of their assets or their houses and sell them. So there's more houses for sale than in the last 3 years. However, it also could be rising interest rates, where the cost of holding that asset is increasing to such a degree where it becomes unprofitable. And what's likely to happen is, as rates rise, there's going to be more and more houses coming on the market. Number one, because the cost of keeping the house is going to go up. And number two, there will be more defaults. And that's going to put pressure on the banks as to decide what to do. So over the next 12 to 24 months, you're probably going to see a drop in house values by between 20 and 25%. They normally lag stock markets by 12 months. So in 12 months' time, you could see a 20% drop in the value of your home or the value of your property portfolio. As regards shares, the semiconductors are down. American Airlines is also down on the back of higher fuel costs. So the airlines are going to suffer from higher fuel costs. Let's look at oil. Oil is going to breach, it's already breached the 120, came back down again. It's going to breach it again. It's going to go well above the 120 level, simply because China is going to absorb all of that spare capacity, and Saudi Arabia increased the price of oil. Why they did that, I don't know. Maybe it could be profit taking, maybe to reduce demand. I'm not really sure, but the price of oil is heading towards the 150 to 160 level over the summer months. And you can catch me on Instagram, Twitter, YouTube. Subscribe, like. Remember, sell the market on any rally. Have a good day.